In yesterday's video blog, I explained how Gold Resources was flagging and looked like it was getting ready to break out to the upside. Today I'd like to cover another gold stock that also looks like it's getting ready for a breakout. This is Barrick Gold, symbol ABX. If we take a look at a 5-year chart of Barrick, we can see that since 2008 it has been trading within this huge right triangle pattern. You'll notice that any time it pulled back on the way up, it pulled back right to this trend line, and it just recently pulled back to it around $50 a share. This is a very, very bullish pattern. As a matter of fact, the way we can calculate the projected price target of this pattern is we take from the low to the high, and then we add it to the neckline, or the hypotenuse actually, and that gives us our price target. In this particular case, that comes out to $92.21. That, of course, assumes we get a breakthrough through the hypotenuse, but the way this chart looks, it looks like we're heading there very shortly. Even for short-term traders, we just bounced off the $50 level. There's probably a minimum 10% move to 55. We may dick around a little bit and then break through. And for long-term traders, this definitely looks like a solid hold. Miners have been lagging the price of gold. Gold has skyrocketed, but it looks like the miners are starting to catch up. This is the second miner that is an extremely bullish pattern. It looks like it's ready to break out. Let's take a look at GDX. This is the ETF that tracks the major miners. I outlined this in my April 27th written blog entry at stockspaywell.com. It has formed a nice cup and handle formation, which is extremely bullish, and we see the handle is this little downtrend. Today we rallied right up to it, and we closed just slightly under it. A breakthrough of this means the miners are definitely going to break out, and I wouldn't be surprised to see that happen next week. The way it closed very close, it looks like we're ready to break out on this. And as I mentioned in that blog, the target of this particular ETF on the breakout is approximately $78 per share. Next, let's take a look at the price of gold itself. On my April 12th blog entry, which was written, I indicated that there was this inverse head and shoulders pattern here and had a projected target price of 153. Well, lo and behold, just a total of 17 days later, it hit it. It retested the neckline once and just zoomed straight up there. Now, gold looks a little spiky here. This could be a buying climax. As you can see, volume has increased. Then again, it could just keep heading higher. There's no way to tell. Frankly, I wouldn't be surprised, since it has reached the target of this pattern, to see a little bit of a pullback or consolidation here and see a rotation into the gold miners taking the lead. So if all goes well, that's what I would expect to see next week. I would expect to see Gold and Barrick and some of the other miners starting to break out to the upside, and we see gold take a little bit of a pause and retracement. This is Ralph Press for StocksPaywell.com, and thank you for watching.